If you don't know what you're doing in crypto, you could end up with less money when you first started. So in today's video, I'm going to tell you what I personally do to stop this happening. I'm not a financial advisor. Anything I do say in this video is for entertainment and educational purposes only. Crypto is risky and you could be at risk at losing lots of money. Don't forget to do your own research first before buying into certain projects. Welcome back. Today I want to talk to you about something called bull markets and bear markets. Bull markets and bear markets don't just happen in crypto, but they also happen in stocks. In crypto, it usually lasts, it's usually a 4-year cycle. You get 3 years of bear market and then you get a year of bull market. How do you know you're in a bull market? Well, the price is usually making higher highs and higher lows consistently. And when the price is going up, there's a lot of euphoria in the air. When there's a lot of euphoria in the air, you're going to hear people start to talk about it. You're going to hear people who wouldn't usually talk about it. You probably hear your parents talk about it. You'll hear people in the shop, down the gym start talking about it. But when you hear everyone start talking about it, it's probably already near the end of the cycle. There's no exact way to tell when the end of the cycle is. No one knows unless you're the billionaires. Only the billionaires, the big boys, really know when you're going to start dumping, and then you're going to enter into a bear market. You've probably already done your window shopping. In your head, you've bought your new house, you've bought your new car. But if you haven't taken profits, you're going to get caught out, and you're going to end up going into the bear market. And a lot of tokens, they go down and they don't recover. So that's why I'm going to show you my strategy to avoid this happening. Because there's certain tokens you don't want to be holding during the bear market. Right, I know you're about to tune out because you just want me to tell you that the price of crypto is going to constantly go up forever and ever, and we're all going to own 10 Lamborghinis each.
I want Lambo. I want it now. Give me Lambo. Give it to me now.
Right, anyway, so speaking of bull markets and bear markets, on the screen in front of me I've got the Ethereum chart. So here we go, look, here's the bear market, and then you get a bull market in 2017. There is the peak. Then we drop down, have a little bounce, and then into the bear market. A lot of people get caught out here because we think there's going to be a recovery. But as you can see, it just dropped and it didn't recover. It did recover, but we had 3 years of bear market until you reach 2020, and then we get another bull market, which reaches the peak in 2021. So from 2021 to 2017 equals a 4-year cycle. Right, so during the bear market, if you were paying attention, what you should have been doing, you should have been dollar cost averaging, also known as DCAing. And what dollar cost averaging is basically you're buying into the asset and you're averaging the cost of the asset you're buying. So let me just show you here. Where I would have bought personally, I would have bought on the dips. I would have bought here. I would have bought here, another dip. I would have bought on this dip maybe. Another dip. And you could have done this throughout all the bear market cycle. So I know with Bitcoin and Ethereum, yeah, they've already sort of had a big pump. But there's still plenty of cryptos out there and they still haven't had this pump yet. So there's still time for you to dollar cost average into these assets. So when you actually do dollar cost into these assets, what you think you're doing? You're buying the asset at a lower price. Now every time the price drops, you're buying it at a cheaper price. You don't want to be buying it. You don't want to buy it on the peaks. You don't want to buy it here. You don't want to buy it there. You don't want to buy it on this peak. You want to buy it when the price dips. So this is going to bring down the overall price in which you're buying the asset at. So this is going to allow you to make bigger profits throughout the bull market when it finally arrives. So when the bull market does finally arrive, how are you going to go about taking profits? Well, here is how I would do it. I would, when the bull market starts, I would take a little bit of profit off the table here. Another peak here, I take a little bit of profit there. I take some there, and I take some there. And I do this all the way up throughout the bull market. So even if you leave some in, you're still going to gain profits throughout this cycle. You can leave some in and let it run because you don't know how high it's going to go exactly. No one really does know. But if you're taking consistent profits throughout the bull market, there's a good chance you can finish the bull cycle with more money than you started. So as you can see, there's where I started taking little profits. Personally, I would maybe take 2% on each peak. Every 20% the price goes up. Because as you can see, this bull market went way higher. So if you keep continuing to take little profits along the way, you should be okay. So when you reach this level, you're going to hear, like I said earlier, you're going to hear people talking about it everywhere. You're going to hear the barber, you're going to hear the taxi driver, you're going to hear people down the gym. Your parents might start asking you about crypto. But by then, you're probably up here somewhere. It's all over the news, the radio, and you're probably somewhere near the cycle top. So by this point, when you're reaching these sort of levels, as I said earlier, I was taking 2% at a time. My profits I would be taking off the table might go from 10% and 20% at a time. And there's a famous saying in crypto, be fearful when others are greedy and be greedy when others are fearful. Meaning, when people are being greedy and the price is going up constantly, up and up and up, that's when you want to start being fearful and maybe thinking of an exit strategy. And the other saying is be greedy when others are fearful. So down here, when everyone's fearful, everyone's scared, that is a good time to be buying in. But there's certain projects you don't want to be holding during the bear market, and I'll discuss these later. Something else you can use to tell where you are in the cycle is something called the Crypto Fear and Greed Index, and you can find this on coinmarketcap.com. So here it is. At the minute you can see it's sitting at 47 and it's neutral. The price is just chopping sideways. The yearly high for last year, it reached 88, and in March 2025 it reached a low of 15 when we hit cycle bottoms. So as you can see, November it reached 88. This would have been a good indicator. Well, before that, anything over 80, you want to start thinking about exiting because the price could come crashing down very quickly. As you can see here, it reached 88 and then the price just dipped right down here and the Fear and Greed Index hit 15. Another indicator to show whether you're in a bull market or bear market is volume. So when you're in the bull market, volume is going to be very high, it's going to be increasing, the price is going to be going up, and there's going to be high interest in crypto. In a bear market, it's going to be the opposite. You're going to get low volume, the price is going to be going down, and there's very low interest in crypto. But something that could catch you out is the price may be going up, but the volume might be going right down. This could indicate there's a few massive whales in the market and they are pushing the price up. There's not many people trading, but there's a few big whales just pushing the price up because their holdings are so high. So a lot of people could enter in, get caught out, and then they'll short the market, and then you've lost your money and then you'll be crying. So earlier I did mention there's certain cryptos that I'm not going to be holding during the bear market. Now that's not to say the bear market is near, because I don't even think we've reached the proper bull market yet. but this is just going to prepare you for when we do hit the bear market. And the only cryptos I would consider holding during the bear market is probably the big layer ones. They're tried and tested, and they've survived numerous bear markets, so I'd expect them to be around for the next bull market and survive through the bear market. So the coins I would probably hold are Bitcoin, Ethereum, Solana, Avalanche, and maybe Sui, because that's a big layer one. They've got big market caps, and yeah, you might not get the gains, the big gains, because the market caps are so high as you would with the smaller coins. The smaller coins would come towards the end of the cycle. Like I said in my last video, the money flows to Bitcoin first, down to Ethereum, the large caps and mid caps, the smaller micro caps then at the end of the cycle. That's where you're going to get the biggest gains, but I wouldn't personally hold them through the bear market. I would be taking my profits and then I would be putting them back in to the larger caps, the more safer coins. So a quick recap. Don't forget to DCA in during the bear market. Buy small chunks at a time on the dips. Don't go all in at once. In the bull market, do the exact opposite. When the price peaks, take little profits along the way. Also, use key indicators such as the fear and greed index and look at the volume levels, and also check what's going on around you socially. Are people talking about it? Are you hearing it on the news? If you follow these indicators, this is going to give you a good chance to stay ahead of the game. Thank you very much for watching. If you did enjoy today's video and you found it helpful, please like and subscribe, and I'll see you in the next video.